risk-free seconds, guysforex.com. So it is Sunday here, just after market open, and pretty chill, but I wanted to produce a video out for you guys. So many of you know one of the things that I do, and one of the things I specialize in is Ichimoku trading. And one of the things that the Ichimoku cloud is very good for is giving you different levels of support and resistance. Now, many of you have probably traded yen pairs and found them to be probably both profitable and challenging at the same time. If you're going to be trading yen pairs, you're going to want to learn how to trade the Ichimoku. Why is that? Well, if anybody knows the yen pairs better than anybody else, it's the Japanese. It's what they specialize in. It's their base currency. They got the most amount of information about that currency, the economics, the fundamentals of what's going on there, what could affect it. And they understand it better than anybody else. And one of the reasons why the yen pairs can be different or a little bit more interesting to trade is because they're working with different levels of support and resistance. And one of the things they use is the Ichimoku cloud to gauge support and resistance. Now, the Kumo itself is what they will often use as their main support and resistance. They will also use the Tenkan and the Kiju lines as well. But the bottom line is that the main thing that they use that functions as support and resistance for them is the Kumo, which is the cloud. In fact, we actually did statistics when I was working for the hedge fund and the broker, and it turns out that anybody who trades dollar yen, if you're not using Ichimoku cloud, more than likely you're going to lose. You could save 15% a year by not trading the dollar yen if you're not going to be using Ichimoku. And so the reason why that is because there's so many Japanese players that are making trades on the yen pairs, particularly the dollar yen. They're using Ichimoku. They're using that as a different measure of support and resistance than just the traditional fibs and pivot lines. So they're working off kind of a different rhythm, a different method for support and resistance. Therefore, it's going to respond to different support and resistance levels. So you're going to have to be aware of that. Now, let's take a look at a few examples of how powerful the Kumo is as a support and resistance. Once you start to learn how to use the Ichimoku cloud well, the market will start to make sense. So here, take a look at this here. We have this nice little rejection down here at 85, and then the pair starts a 5 out of 6 day climb all the way up to 90, 50, almost 91.5. Now, it doesn't make it to the round number here, as you can see. It makes it a little bit shy of that. And it got stopped here. And it, after this huge up bar, which is over 250 pips, what does it do? It runs into this wall and then stops and does 3 days of straight selling, which go way past this low here. Now, this may not make any sense. I mean, this curvature is somewhat parabolic, but this may not make any sense as to why it stopped short of 91, what was there in the way. But when you take a look at the same chart, you see the Ichimoku cloud ran right into that, stopped, and then reversed course from there. Now the market starts to make sense. Let's take a look at another example here. Massive run, even a much more impressive run on a 4-hour chart on the Aussie yen. I mean, look at this. It's virtually all blue candles with a few spattered red candles here. Now, what is most interesting is this little portion right here. We have a nice little leg, kind of, sits back a little bit, then huge up candle here. This is the largest blue candle. It's actually bigger than this candle. The largest blue up candle here broke through some sort of resistance here. And then look what it does here. Take a look at these lines right here. I'm going to zoom in for you to this little area. Boom, boom, and boom. 3 rejections, all different price levels, all of them completely different, not from one straight line. You can't draw a straight line on them because it just doesn't match up. So what did it run into? Why did it stop there? Why did these lines all of a sudden just stop here? Well, after you take a look at the next chart, remember these 3 little candle dips here. Boom, take a look at that. Here's the big candle that broke through the Kumo, broke through the resistance. And taking a look at it, where did they stop? Boom, boom, right on the top of the Kumo. Now all of a sudden the market starts to make sense. That's what trading the Ichimoku cloud can do. It gives you an alternative level of support and resistance. And if you're going to be trading yen pairs, this is something you're going to want to be looking at. You're going to want to learn how to use. One more case in point here. Take a look at this little thing right here. We're below the Kumo. We start treating it as resistance for a little bit. Then we pierce into it. We dip back below it here. Once we break above it, what does the market do? Pulls right back to the Kumo here, where it sits for 3 candles. This is a 4-hour chart, so 12 hours of price action just happened to pull back right here, sits right on top of what is called a flat top Kumo, and then launches from there. This is very common when trading Kumo breaks to see this particular move, that it pulls back to the Kumo and then takes off. This is just some of the basic introductory elements to trading the Ichimoku cloud using the Kumo support resistance, trading Kumo breaks using all these methods. If you'd like to learn more advanced methods on how to use this based upon quantitative proprietary data, based upon advanced methods that have been backtested for over 10 years, then check out the Advanced Ichimoku course. You can check it out on our website, my website, secondskiesforex.com. Check out the Advanced Ichimoku course. Other than that, I wish you all good luck trading the Ichimoku cloud. I bid you all adieu, and I look forward to hearing from you. Until then, take care, everyone.